Alright, I think we should be recording. But yeah, I guess quick intro then. Today we're going to be running through a new app I've created called the FRS 105.app. And as you can tell here, quite simply, it's a financial statement generation tool. And I guess then a bit of background and context for why I created this app is essentially built on a belief that, small businesses in the UK shouldn't have to pay hundreds, if not thousands of pounds a year to generate financial statements, especially given the fact that FRS 105 in itself is quite a simple and bare bones financial reporting standard. Chartered accountants such as myself who charge a lot of money to effectively take a trial balance from what you'd have from like bookkeeping into then financial like line items and statements. And effectively what you're really paying for is just a translation from management accounting to financial accounting, aka allocating or what we call mapping standard bookkeeping concepts into financial statement concepts. And effectively then what this tool does is it automates the entire process. And in terms of who can report under FRS 105 standards, then these numbers are subject to change. I believe this year they will actually pretty much double, except for I think employees. But at least as of the last financial year, the turnover, which is revenue, of no more than £632,000. Balance sheet, which is basically just total assets of no more than £316,000, and then an average number of employees throughout the year, at least, of no more than 10. So a lot of, as you'd expect, small businesses up and down the country will fall under this threshold. So moving on to the website then, as you can see here, we've got some helpful information on the side, and you can just toggle these, all the details you need to know. So I won't go too much into this. You can just read it in your own time if you do use the website. First thing you want to do is create your own entity, so your own business. The reason you're allowed up to 10 entities is because if you are an accountant yourself and you want to use this tool, you also have that option. I should probably then mention the pricing. So basically there's two pricing options. The first one is, it's £5 a month for 25 generations a month. This is mainly for, say, accountants or small accountancy firms who then want to utilize the tool to generate their financial statements for their clients. So that option will be for them, literally £5 a month, so not too bad. And then you can also contact me down here via this email if you want more generations. So if you have a client base, I doubt anyone will, but if you have a client base where you require more than 25 generations a month, you can contact me down here. And then the other option is the advisory option, which is basically you just send me your trial balance in any format, in any way, and then we basically run the entire process for you and also file the accounts for you. And that'll be £20 one-off payment. So effectively, that's what we're trying to do here. We're trying to commoditize the entire process to a maximum of £20 a year. For now, we'll delete this entity and then we'll use that as a test. So yeah, quite simply just create new entity, and then you have 3 required fields. This is the fields that we basically need to know to report in the financial statement based on company's house. So all 3 of these are going to be company's house pieces of information. So if you don't know, just come onto company's house here, find company information. Again, if you are a director, you should know this information, but then you can search for your company in here. You can see the URL, and then any of the information in there for company name, company number, and obviously here's the officer name, which we'll come on to, but you should also then have a registered office address, and that's what you want to input in these 3 fields. It needs to exactly match whatever is in the registry, otherwise, again, you will have issues. So for this example, we're just going to put in very generic information that you would expect. Again, the company name then either needs to include LTD or limited, again, as you'd expect. So for now, we'll just do that. And then your address is with the registered address, which is copy and paste generic address here. So if you create the entity, you come onto the next page. Once the entity is created, it is saved, so you can go back to your dashboard and see here, but we'll open it up. So breaking down then, this is the actual financial statement generation process for the financial year that you will be filing under. You can see here you have 2 options, which is the full set of accounts where you include the profit and loss statement, and then the filleted set of accounts, which is the registrar, which basically in the accounting world we call the registrar filing, and this is actually the set of accounts that you'd then file on company's house. The reason we've given both options is because I know internally some people like having a full set of accounts, including their P&L statement, just to, have to hand and see how the business is performing relative to previous years. So that option is there, but again, you don't need to file this set or this version on the company's house website. Then we have a toggle here between audited and unaudited. The majority of people, pretty much I'm guessing everyone, will be under unaudited because the thresholds to be an audited company, at that point you won't be reporting under FRS 105, you'll be likely reporting under the larger FRS 102 or even the International Financial Reporting Standard, which is IFRS. And then here we have the comparative year. So very simply, if it's your first year trading, you want to keep this toggle on, and then if you've traded for multiple years, you want to click the show comparative year. So simply coming on, then you can then upload your 2 trial balances, as you can see here. So we'll upload the current year one and then the prior year one examples we have. So under FRS 105, then the only significant or real financial statement disclosure is basically reporting the number of employees in the business. So here we can say current year 6, prior year 7, and then for the name we'll just write a generic one I always do, which is Bob Smith. And then a sign-off date, we'll just give it a random date for the most recent ended financial year. So again, if your financial year end date is any other time, so some people have March year ends, some people even have June year ends, you can use that, but I'll just use a generic 31st of December 2025 year end. And then that is literally all you need to do. So upload the trial balance, disclose how many employees you had. Effectively, if you're the director, write off, put your name in, the date you're signing off. The date of sign off will just be the date you're generating the financial statements, really, and then the financial year end. Click upload, and now you enter the process here. So what we do is we first validate the trial balance to make sure the formatting and balances, like I said, the requirements are all correct and it's nice. So basically the software is able to then pass the accounts, aka identify what the actual account names are and the balances, which is only, again, the 2 real pieces of information we need. And then the third step, which is the main step, is then the AI in the background via semantic reasoning. And then we have like a concept layer. It takes management accounting, trial balance descriptions, and then automatically maps it to the financial statement, whether it's a creditor, a debtor, or if it's a P&L item, it might be other charges, depreciation. It's able to just via the trial balance name and then the balance itself. So if it's a credit or debit balance, it's able to semantically identify and reason where it should be mapped. We'll get onto that actually in the download here. So if you just download the PDF, so as you can see, within a matter of 20-30 seconds, you have a full FRS 105 compliant financial statement. So you have your company name, which will come up here. This will then say unaudited or audited, depending what you are, the financial statements. And then for the year end, again, we put the 31st of December, and these are a full set of accounts because, again, we want to show the P&L. Your company house registration will also then be disclosed correctly here as well. So you come onto the P&L, and very, very simple P&L. Again, these aren't required by law to be disclosed. So very simple and basic, just basically what you'd want internally. So you can see the turnover here, 142.71. And you can kind of quickly pick up the fact that 2025 column is just basically double the 2024, so that basically to me shows I've done it correctly because that's how I set these TBs up. All formatted as well, as you'd expect, very normally, bold, underline, things like that. You then have the statement of financial position or the balance sheet. Again, the company house registration number is disclosed. And again, you can very simply see the net assets match the capital reserves. If anyone is an accountant, well, that's what you'd expect. You want your net assets. So yeah, assets minus liabilities to equal the equity of the company, which is basically capital reserves. Your address then that you've entered comes up here. And then your employees reported, which is again the only real note to the financial statement is this a note here of any significance. You then have generic disclosures that you are required by law to disclose. So this, no matter what, will just basically fixed, is a fixed requirement and disclosure. And then again, the date you signed off is there, and then your name as director is there. You can then e-sign this, so you can then export it to PDF. One plan I also do have then is to have a next step where you then import this PDF in, and you can I want to try and basically create an electronic signature tool. I need to contact Companies House and ask then if we can file digitally via the portal from my website. So, but that's something in the works, and I need to contact Companies House about. But eventually that hopefully will come where you can then file directly from the website straight to Companies House. But for now, you probably need to do it separately, which again, we can provide that service if you need. So coming more into the background now, we'll download the map trial balance. So this is just to make sure and have a sense check that everything has been mapped correctly and in line with your expectations. Again, if you're not an accountant, I wouldn't worry too much. All right, coming into the CSV export then. So for the prior year, you can kind of see here, if I just expand this, debit credit balances or the net balance. If you sum the net balances up, it sums to 0, as you'd expect for a trial balance. So we just hide these for now. And then yeah, you can essentially see the two columns you would have imported, which would be the account code, the account name, and then the net balance amounts. And then the remainder has then been either created by the software and or done by AI. Here we can see essentially called the concept ID and the concept code. And so the way the mapping occurs is it doesn't just take the TB item and then map it straight away to the FRS 105 line. So for instance, like a bank straight to current assets. Instead, what it does is it tries to semantically reason what the TB item is via the name, but also then the net balance. So for instance, a good example would be corporation tax, right? With a TB name like corporation tax, it's very hard to distinguish between whether it's a P&L item or a balance sheet item. In that instance, what we also have then within the semantic reasoning and within the concept ID and the concept code is it factors in the account code numbering. So what you'd find is a lot of TB codes are ordered, right? So they're either ordered from balance sheet all the way down to P&L, or they're from P&L to the balance sheet. In this specific TB, it's very clearly that this half here, the top half here, are all balance sheet items, and all of these are clearly P&L items, except of course the dividends line here, which can clearly see is being correctly mapped to equity, the profit and loss account for the FRS 105 accounts. And yeah, you can kind of see the AI comment here, which basically says, despite it being a debit balance and with a P&L code, instead of expensing it to P&L, as I say, dividend expense under FRS 105, it should still get mapped to equity dividends paid. So you can kind of see there's a lot of layers and a lot of reasoning, if statements and things like that to kind of catch everything. Obviously I've been developing this for a while now, and then also using my, again, accounting background to make sure the AI kind of knows when to map things. There's a lot of keyword matching just to help with the API costs and things like that. But yeah, you can kind of review it for yourself, and again, if you have any issues, just email me. Moving on to the current year one then, it's going to be basically the same because like I said, all I did was really double the values. But again, as you can see here, all current assets, raw materials and work in progress are stock inventory. Again, because they're debit balances, you could misconstrue that as a P&L item, right? So like raw material consumption costs. But again, it's clearly identified the fact that it's a 1200 CB code surrounded by other, balance sheet items. So it's clearly a balance sheet inventory / stock item. Whereas actually, if you scroll down, there's one here, cost of materials used. So that clearly then is the P&L item for raw material expenditure, and it's clearly mapped that. Again, debit balance, so it could get confusing where it might be a current asset, but within the naming, it clearly says used, so it's consumed. And then again, surrounded by other P&L TB codes, so clearly a P&L item. And you can kind of see here, again, correctly picked up the fact that despite being a P&L TB code, and then dividends, the debit balance is still an equity item to then obviously debit against the equity. So yeah, that's everything there. I think that is the whole walkthrough. If there's, again, any questions you want to put down in the comments, definitely do so. I'll try to respond to them as quick as possible. But yeah, I think I'll leave it there for now.